Been clearing out your closet on Vinted, maybe renting out your driveway for a bit of extra cash? Well, that little side hustle you've got going on, it might not be as under the radar as you think. The game has seriously changed for the 2025/26 tax year, and HMRC now has a much clearer window into what you're earning online. So, what does this actually mean for you? Let's get right into it.
To make sense of all this, we're using a fantastic guide put together by the tax experts over at ProTax Accountant. They've laid out exactly what's changed, why it's changed, and what it all means for you, making sure you've got the very latest information for 2026.
So, you might be wondering, does this even affect me? Well, if you've sold a few bits and pieces online, maybe rented out a spare room on Airbnb, or even done some freelance work through an app, then the answer is almost certainly yes. You see, these new rules are all about bringing more transparency to the whole gig and sharing economy. And that means pretty much every digital platform you can think of is now involved.
Okay, so here's how we're going to break it all down for you. We'll start with how HMRC is keeping tabs on your income, then we'll walk through the key numbers you need to know, and we'll finish up with a simple action plan to give you complete peace of mind.
First up, Section 1, HMRC's new digital eye. Now, you can forget that old image of a tax inspector manually sifting through dusty records. We're talking about a powerful, automated system that is always switched on. So, what's really going on under the hood? Let me introduce you to Connect. This is HMRC's seriously powerful AI system. It's even been called a digital detective. And its whole purpose, its only job, is to sift through billions and billions of pieces of data to find links and discrepancies that a human would almost certainly miss. It's constantly looking for any mismatch between the lifestyle you show the world and the income you actually declare.
Now, what's really incredible is just the sheer scope of the data Connect has access to. It's not just peeking at your tax return. Oh no. It's pulling in data from the land registry to see what property you own. It's looking at your bank records. It's getting information from over 100 other countries about any overseas accounts. And this is the big one for our topic today. It's now getting direct automatic reports from platforms like eBay, Etsy, Airbnb, and Uber. It can even scan your publicly available social media. Wild, isn't it?
So, that brings us right to Section 2. Why on earth have the rules changed? And let's be really clear on this point. This is not a new tax. You are not being taxed on anything that wasn't already taxable. What's new is the system of sharing information, and it's designed to make sure everyone pays their fair share.
And, this change isn't just something the UK cooked up on its own. It's actually part of a huge global agreement, coordinated by the Organization for Economic Cooperation and Development, or the OECD. The UK, along with loads of other countries, has signed up to what they call these model rules. And what that does is create one standardized international system. It just makes tax transparency a global effort.
So, what's the big idea behind all of this? Well, it really boils down to three main things. First, to help honest sellers, get their tax right. Second, to get a better handle on tackling tax evasion. And third, to create a level playing field for every single digital platform out there.
Okay, let's move on to Section 3 and see how this all builds. What income is actually being tracked? Well, the scope is really wide. It covers everything from selling secondhand clothes to providing high-level professional services like software development through a platform. Now, this is where most people get confused, so stay with me. This next point is absolutely vital.
Right, this is the absolute key distinction you need to get your head around. On the left, we've got selling your own personal stuff. Think of it like a digital car boot sale. You're just clearing out your attic, selling old clothes the kids have grown out of. Generally, this is not taxable. But on the right, we have trading. This is when you buy or make things specifically with the intention of selling them on for a profit, and that income is taxable.
See, it all comes down to your intent. Let me give you an example. If you bought a jacket, wore it for a year, and then sold it on Vinted, that's just a personal sale. But if you went to a car boot sale specifically to buy 10 vintage jackets to flip online for a profit, well, then you're acting as a trader in the eyes of HMRC.
And here's a brilliant pro tip from the team at ProTax Accountant that will honestly save you a world of headaches. Whether you think you're trading or not, just get into the habit of keeping a simple record. A basic spreadsheet tracking what you sold, for how much, and any costs like platform fees or postage. It will be an absolute lifesaver if HMRC ever asks any questions or if you find you do need to file a tax return.
Okay, on to Section 4, the magic numbers to know. For the 2025/26 tax year, there are a few key financial thresholds that you absolutely need to be aware of. Let's break them down nice and simple. The first magic number is £1,000. The UK has a tax-free allowance for both trading income and for property income, and what's fantastic is that you get a separate £1,000 allowance for each of them. So you could earn £1,000 from a side hustle and another £1,000 from renting your driveway, and both would be covered by these allowances. Pretty generous, right?
And here's a quick did you know for you that should bring peace of mind to a lot of people. If your total gross trading income, and that's your total sales before you take off any fees or costs, is under that £1,000 threshold, you generally don't even need to tell HMRC about it. Now listen up, because this is the part that often causes confusion. These are the triggers that mean the platform itself, like eBay or Vinted, has to report your activity to HMRC. This happens if, on a single platform and a single year, you either make more than 30 sales or you earn more than £1,735. But, and this is so crucial, just because the platform reports you, it doesn't automatically mean you owe tax. You could easily still be well under your £1,000 trading allowance, for example.
So what happens if you just ignore all of this? Let's talk about the risks in Section 5. Now, this isn't to scare you, it's just to show you why being proactive is so important.
This chart shows you exactly how penalties can escalate based on your behavior. If you fail to declare some income because of a careless mistake, the penalty can be up to 30% of the tax you owe. If HMRC thinks the error was deliberate, that jumps to 70%. And if they find you deliberately made an error and then tried to hide it, the penalty can be as high as 100% of the tax due, which effectively doubles your bill.
But here's the good news. Choosing to be proactive is your absolute best defense. If you realize you've made a mistake, coming forward and making a voluntary, unprompted disclosure to HMRC before they contact you can reduce those penalties dramatically. Honestly, it's always the best policy, and it can save you a serious amount of money.
This leads us perfectly to our final section, Section 6, Your Path to Peace of Mind. We've talked about the tech, the rules, and the risks, so now let's put it all together into a simple, actionable plan to keep you compliant and completely worry-free.
It all boils down to this simple 4-step action plan. First, just be honest with yourself about what you're doing. Are you clearing out clutter, or are you running a little business? Second, track your activity with that simple spreadsheet. Third, keep a close eye on that £1,000 threshold. And fourth, and this is the most important one, if you're ever unsure, ask for help. Don't guess.
And on that note, it is really vital to state that the information here is for general guidance only. Everyone's tax situation is unique and can be quite complex. So, before you make any financial decisions based on what you've heard, you absolutely must consult a qualified tax expert who can give you advice that's tailored to your specific circumstances.
Ultimately, the best way to get total peace of mind is to talk to an expert. If any of this has raised questions for you, the team at ProTax Accountant are there to help. You can reach them on WhatsApp or give them a call on 07985 689 912, or you can drop them an email at info@protaxaccountant.co.uk. For more clear, straightforward tax advice, make sure you subscribe to their YouTube channel. Thanks for joining me, and here's to getting your tax right.